Hello, welcome to the Grow Your Wealthy Mindset podcast, where it is all about helping amazing physicians just like you create a wealthy life free from burnout and with the financial security to practice medicine on your own terms. I'm your host, Dr. Elisa Chiang. Hello, and welcome back to the Grow Your Wealthy Mindset podcast. I had the honor of being invited to speak at the financial wellness panel at the Women in Ophthalmology Conference in Carlsbad, California, in August of 2024. When I was asked to speak, I was given open reins to speak on any topic, but only 8 minutes. So I really had to think hard about what was really important to say to a group of women ophthalmologists, ranging from medical students, residents, fellows, new attendings, and even experienced attendings, what was most important to talk about in terms of finances. A lot of these concepts I've shared in the podcast has encompassed some of these ideas, but I thought, why not make a podcast episode that very much succinctly embodies what I said in that talk? And so I entitled that talk, Your Second Job, Taking Ownership of Your Financial Future. So what do I mean by your second job? I want you to think of a job as what you do to have incoming cash flow to spend. When you retire from a position, you still need incoming cash flow. You need money to pay for your expenses. Even if your house is paid off, you're still going to have utilities. You're still going to have property taxes. You're still going to have maintenance on your home. We live in a society where it requires money in order to continue to live out our life and the many comforts that we become accustomed to. And so really, your job in retirement is to manage your assets to provide you that cash flow. Again, think of a job as something you do to have incoming cash flow to spend. When you're no longer working, you need your money to be working for you, and you need to manage your assets, which are making money, in order to have money to spend. The sooner you start working on that job and managing your assets, the better you'll get at your job. It's like any job. The first few years of being an attending physician really has still a steep learning curve because you're really learning on how to be on your own. Even if you had a lot of autonomy during your training, it's still different when you don't have someone right at backup. Instead, you may be in a position where you can actually make a lot of changes, which is great. You can actually make decisions of how things you want to flow. But with that, you have to take the consequences of the decisions you make. And the more decisions you're making early on, the more you're going to learn, the more you're going to find out what works and what doesn't work. And the same is true when it comes to learning how to invest and manage your assets. I always want to go a little into our thoughts about money, because we as physicians tend to have decided to become physicians because we want to help people. Obviously, physicians are smart and capable people. Only 7% of people who apply to medical school actually get in. And so we could be doing a lot of other careers that are potentially even more lucrative. I mean, physicians do make good money, but if you look at the tech industry or you look at even the financial industry, the Wall Street bros, so to speak, and there are a lot of people making a lot of money out there in this world. And in fact, I would say that my younger sister, so in my family, we actually all have PhDs, my mother, my father, my brother, and myself, except for my younger sister. And yet she actually makes the most of any of us. And she's the one with the MBA. So business is really where the money's at. Many of us don't become physicians solely to make money. We wanted to do it because we felt like it was a calling, or we wanted to be in a more helping profession. We want to be of service to our communities. That being said, you can be a good doctor and still care about money. And I'm going to repeat that. You can be a good doctor and still care about money. You are the CFO of your household. And I would say you or your spouse, but even if your spouse is really the one handling the finances, I do encourage it to be at least somewhat of a group effort where you're at least both in communication about what you're doing with your finances. Because no one really cares about your money more than you do. I mean, possibly your children because they're thinking about inheriting it, but all kidding aside, no financial advisor, no person that you hire is going to care about your monetary and financial situation more than you and your immediate family. And unfortunately, we as physicians really don't get a financial education. The majority of physicians make in the top 10% of income in the United States, and yet 25% of physicians age 65 and older have a net worth of under $1 million. And unfortunately, that means that a lot of physicians aren't going to be able to really enjoy a retirement or will have to continue to work because most of us physicians don't have things like pension plans in order to help us continue to have cash flow during retirement. We really have to figure out our own retirement, and that's why it's so important for us physicians to gain financial literacy. And of course, we don't learn about it anytime during our training. We don't learn about anytime during our education. It's not standard part of curriculum of any undergrad unless you're, majoring in finance or business. But in general, I certainly didn't learn anything about finance during my undergrad. Now, there are some residency and fellowship programs that will bring in speakers, but that's definitely not a requirement and not necessarily the norm. I do give talks to residency programs and fellowship programs for free. I have a 1-hour Zoom call that really just gives basic financial literacy. So if any of you listening to this podcast are a residency program director or fellowship program director, I'm happy to set up a time where we can do the Zoom meeting for your trainees totally free of charge. And it's information that I think every physician wished they had earlier. I had the opportunity to meet Dr. William Bernstein, who is a physician, but also well-known in the financial space. And this is a quote by him. "You are engaged in a life and death struggle with the financial services industry. If you act on the assumption that every broker, insurance salesman, and financial advisor you encounter is a hardened criminal, you will do just fine." So that might be a little bit of exaggeration. There are definitely financial advisors who are good people, but unfortunately, financial advisors aren't fiduciary, or not all of them are fiduciary. Not all financial advisors are fiduciary. Most people who call themselves financial advisors are really commission salesmen and, again, not truly fiduciary. So when someone says they're a financial advisor, that's different from saying that they're a certified financial planner or have some kind of meaningful designation. But even if they do have one of these meaningful designations, and again, they could still be a good person. But when we, as physicians, think about treating our patients, we really think about what's in the best interest of the patient. And we also try to get the patient involvement in making their own medical decisions. Well, unfortunately, that's really just not the way the financial industry culture is. And so they may be thinking like, oh, this is a good product, but they're not necessarily thinking about, is this really what's best for you in your situation? Sometimes they're thinking about, well, what can be good for you, good product, but also what can potentially give them a good commission as well. There are things a good financial advisor can do for you. They can help you create an investing plan. And that can be an important thing if you want to have something more structured so that you can go back and follow it and have something remind you about what your financial plan is. A financial advisor can certainly help you create that. They can also provide reassurance, right? They can talk you down from selling your stocks when the stock market drops. They can also take care of some of your financial tasks for you. But I implore you, if you use a financial advisor, that you really understand how that financial advisor is being paid and what that true cost to you really is. You want to treat a financial advisor as an advisor, and you're still the CFO. You're still the one making decisions, right? A good CFO, a good leader, any kind of leader will have the people around them who give them advice, but as a good leader, you're making the decisions and taking responsibility for the decisions you make. Understand the true cost of the financial advice. If you pay just 1.5% of your portfolio each year in fees, commissions, and expenses, how much less would you end up with? Well, over a 30-year investing career, which may sound like a long time, but it is actually relatively short because if you think about someone retiring at 65, they could live until 95. So that's still a 30-year investing career, just even after retirement. But let's get back. So for over 30 years, if you have 9% pre-fee returns and you're investing $50,000 a year, then the difference of a 1.5% in expenses is the difference of having $7.69 million versus $5.65 million at the end of the 30 years. So that's really a $2 million difference. You really want to ask, is that financial advisor worth $2 million to you? Now, I've talked to physicians who say, yes, I don't want to deal with any of it. Whatever they're taking, like everything's still going fine. I still have enough. And if you truly have enough, then maybe that is a fee that you're willing to pay. But Again, still be in a position where you understand what's going on. Because if you don't, it may be possible that not only are there high expenses, but worst case scenario, you're in a Ben Bernanke situation where you think everything's going fine, and then suddenly you don't have anything. That $2 million could be 5 or more years of your gross salary. It could also amount to another $80,000 to spend during your retirement. Think about what $80,000 a year could buy. There are people who can live off $80,000 a year during their retirement easily. So it is not a trivial sum. And of course, I really encourage everyone, not just physicians, but really everyone to save and invest for financial freedom. Because at some point you will want to stop working or you'll be no longer able to work. It's also possible that you just want to go part-time. Or it may mean that you want to take a position that pays less, but where you feel like you're able to contribute more. Your saving and investing rate is the highest predictor of your success, more so than the rate of return on your investments. So you don't have to spend a whole lot of time learning about all different investments and really maximizing your returns. You do want to have a nice diversified portfolio, but just meeting market returns and doing index fund investing really is enough to get most people to their financial goals. I do want to really state that you can't save enough for retirement. You have to invest. And so that's why a lot of times people just talk about savings, your savings rate. And I always want to say save and invest. Because if you're saving a lot, but it's sitting in a bank account, you can't save your way to retirement unless you are making millions of dollars a year. Even if you're making a really good income, like multiple six figures, I'm talking $200,000 to $600,000 a year, and you're spending a significant portion of that, then you will need to invest so that that money starts growing at a more expedient rate than what you can get even in a high yield savings account, which, these days do pay relatively well, but still at 4%, we're looking at just slightly above inflation and even below what recent inflation numbers have been. Every physician can really learn to manage their investments with low-cost index funds without really use of a financial advisor, or get a financial advisor, get a fee-based financial advisor to help you formulate your initial investing plan, and then you execute it on your own. What do I mean by investing in low-cost index funds? When you buy an index, you're basically buying every single stock on the index. And an index is something specific to measure a certain part of the market. So the S&P or Standard & Poor's 500 index are pretty much the 500 largest companies in the United States, but they do also have to meet certain other criteria. The S&P 500 index really just tracks these companies. So if you purchase a S&P 500 index fund, it's going to essentially just buy these 500 companies and hold them. That really decreases your expenses because you're not trading constantly, you're not having a turnover rate, and now you can essentially match the market returns of these 500 companies. Other popular indexes are Total US Stock Market Fund, which may not buy every single stock in the US stock market, but generally will buy thousands, upwards of over 3,000 stocks across the US stock market. There's also international index funds where they're buying stocks of international companies in Europe and Asia, kind of more developed countries. There's also total stock market bond funds or more specific bond funds, like you could just invest in government treasuries, for example. And the premise is that it's really difficult to beat the market, especially when you add in fees. In fact, 90% of financial advisors fail to beat the market, and most mutual funds don't beat the market. But if you have an actively managed mutual fund, now you're paying for some fund manager as well as analysts and generally multiple people. All of these people are typically making six figures. And now you also have the expenses that they incur, their computers, their offices, as well as trading expenses. And so why pay for all these expenses if they're not able to actually give you a better return? And even if they give you a better return, what's the chance that they can give you a better return year on year over year? It's actually really low. So really the best thing you can do is match the market and keep your expenses low. When index funds first came out, of course, people were skeptical, but it's really been shown over the decades that index funds have consistently and reliably outperformed professional management. So again, I said that the original talk was 8 minutes. I think I've been talking a little longer because I've been embellishing a little bit more for this podcast episode. But I really want every physician to be able to turn their high income into high wealth, because we as physicians do make a good income. But it's really not what you make, it's what you keep that counts. And you want to make your money work as hard as you do. These physicians do work hard. We deserve to be taken care of at the point where we decide that we're not going to work quite so hard anymore. You do want to try to avoid losing money, and that's really to taxes, disability, death, and speculation. Wherever you can legally limit your tax burden, that's something you want to do. You want to make sure that you have things like disability insurance to cover yourself in the case that you do become disabled. If a death were to happen that would be financially devastating, like the loss of your spouse, you want to make sure that you have term life insurance as needed. And if you do want to speculate a little, if you want to play around with individual stocks, you find that fun, it's certainly fine to do that with a small portion of your portfolio, but definitely no more than 5% of your portfolio. So again, I just wanted to go over what I thought were the most important things to say when I had a very limited time. Again, a lot of these concepts have been said throughout the podcast, but here it is in one episode, the most important thing I think that every physician needs to hear about finances. Hope you enjoyed this episode. Of course, I talked a little bit about working with financial advisors, and there are some good financial advisors out there, but you really want to vet them and make sure that you find someone who really has the credentials to show that they know what they're talking about and know what they're doing, and really make sure that they're going to do what's best for you and seeing how they're paid. So generally, I do recommend doing a fixed fee as opposed to an assets under management model, though there may be times where an assets under management model works, but you want to make sure that's a really reasonable percentage, no more than 1%. And really, if it's 1%, that should be for a small portfolio value. As your portfolio grows, if they're really managing more, it doesn't take that much more work to manage a $5 million portfolio as it does a $500,000 portfolio. If instead of working with a financial advisor, you really want to be able to do this yourself, but you think you just need more support, a little hand-holding, a little bit more personal attention, then really consider working with me, because this is what I do. I do financial and money coaching. What that entails is helping you actually figure out what you want to do, create your financial plan, look at your financial goals, and help you create your own path on how you want to get there. And that might mean deviating away from index fund investing. Some people really want to try out real estate investing, and there are pros to cons to that, and we go over all that. It's also just kind of going over your mindset, how you're thinking about money. Are you having a lot of scarcity thoughts about money? When you think about investing, does it seem scary? And really exploring why that's the case. It's probably more the case if you're a woman, and that happens to be because of a lot of historical and societal messaging that we've received all throughout our lives. These are all mental constructs that we can work on, or we can work on the very nitty-gritty practical aspects of your money management. I've also had clients that come to me who have gone to a financial planner and gotten a financial plan, but just need help in actually figuring out how to execute that plan. And that's something I can also help you as a money coach. If any of that sounds of interest to you, please sign up for a Zoom call with me at my website, www.growyourwealthymindset.com. I'd love to chat with you and talk about where you're at and whether I can help you and whether it's a good fit. It's no pressure. I'm happy to be of service. Thank you so much for being a listener of the Grow Your Wealthy Mindset podcast, and I'll be back next week with another episode. If you enjoyed this episode, I would love it if you could share it with your friends and colleagues. And now for the disclaimer. I am not a certified financial planner, accountant, or attorney, and nothing I say should be construed as professional investment, tax, or legal advice. This show is primarily for your education and entertainment. I am a physician, but I'm probably not your physician. So if you need any medical advice, please contact your own physician. Thank you.